Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW SYS 008 traders, and our website is www.stochastic-macd.com. For all trade, we use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW SYS 008 traders. The title of this video is the S&P 500 Trading on the Edge. S&P 500 Trading on the Edge. Let's get started. Alright. In order to make excellent trading on investment decision, one must buy at a valid support level or sell at a valid resistance level. The validation of support and resistance level is the key to successful trading or investment. In this video, we're going to thoroughly analyze the Standard & Poor index, the S&P 500, and we need to pay attention to some key level as we are navigating through these messy markets, okay? As I always say to traders, it's not all about technical trading. It's about, combining the technical and the fundamental, or being aware of the fundamental at least before using the technicals, all right? If we are now on the yearly charts, we can see that. So the first thing we are trading, we are not trading the stochastic, we are not trading the technical indicators. It's a big mistake to trade the technical indicator. So you can see that my slow stochastic 633 was overbought while the price was going up. Alright? So the first thing we are trading is the price. What the price has done, the price went up, displaying higher lows, higher highs. And then we see that it pulled back a bit, which is a kind of profit taken here. In the language of the wave principle, we will say this is a correction. So we'll say this is an impulsive move, a trending phase, followed by a correction. But another thing that we know, some of us that understand what we call the alien wave patterns, though this video is not for alien, it's not about alien wave, so do not switch off yet, stay with us. It's not about alien wave. It's good to know about alien wave. When a price, you see this people will say it pulled back and you display a double bottom. This is bullish. It's a beautiful pattern for investors. So instead of the price went up, instead of displaying a higher low, the price display a higher double bottom pattern. Very, very bullish. Provided that this resistance here is kaput. Yes, it is kaput. And the candle is closed. Wait for the candle to close. If you are trading a breakout on a 50-minute chart, a 50-minute candle should close. If you're on a 30-minute chart, you're on a daily chart, on a monthly chart, you're on a yearly chart, the candle must close. Here, it's closed bullishly. So we have a breakout. Now, we want to validate these key levels right here at a support level. So there's a high chance that the S&P 500 may try to retest this level. But as it's going down, there are other support levels before these ultimate key levels, but the ultimate key levels in the zone of 1450, all right? That's the key level that we have taken out, 1450, all right? So the market may decide to retest the level of 1450, but as the price is pulling down, there are other key levels that we must watch. But before we continue with this discussion about the S&P 500 trading on the edge, I've highlighted this key level here in a zone of 1941. Okay, this is the 138% Fibonacci projection of the prior trend here. You see, price went up all the way here. This level here is a 138% Fibonacci extension or Fibonacci projection of this prior bullish trend. It's a key level. In fact, the Fibonacci projection and the Fibonacci extension, so to speak, will reveal to traders hidden support and resistance level. There is one here, which is at 1941. See how the price was coming near it. Some of us that understand the flat correction or the running flat correction know that this level of 138% Fibonacci extension is very, very important level, because sometimes a false breakout will come out, price will break above a key level, but will fail to go above the level of a 138% level, and will find a resistance exactly at 138% Fibonacci extension level. By the way, if you want to know about Fibonacci, go to www.dayprotrader.com. This is one of our websites also. So, for somebody who is trading the S&P 500 and the stocks that are listed on the S&P 500, these traders, these market participants must know this level 1941. 1941. Note it down. If you are trading E-mini, you are trading in stock listed on American stock, you are trading in the S&P 500 itself, 1941 is a hidden key level. Here it is. Gorgeous. Here. Alright? Do not forget that level. The net above that level, there's another key level. So why are we doing this? As I repeated to you in all video, it's all about navigation. You buy at A, you're expecting it to go to B. Alright? You sell at A, you're expecting it to go to B. Yes or no? That's what we are doing. You buy at X price, you want it to go up to Y price. Yes or no? Alright? This is why we want to know the key levels to navigate through this messy market. Professional or serious. So suppose you want to buy, suppose you are a very sophisticated market participant, you want to buy. You will say, I would prefer to buy, at $10. But I will be much happier to buy, below $10. All right? Because you know that the stock is going to go up, but you are not prepared to buy at $12. Okay, so you say, I don't want to buy at $12, I don't want to buy at $11, I want to buy, at $10 or below. So, or inferior or equal to $10. So when you are talking to your broker like this, your broker will say, this guy is very serious, doesn't want to buy. So your broker will be working hard for you to get the best price. All right? The same thing you are day trading, you want to know where is the value zone, where the investor, fundamental trader, technical trader that are very smart, will be happy to load it. So sometimes there are key levels where the brokers, all right, that are working for their smart client are busy buying. So this is the time when you also would like to buy. Because there's a value that everybody's buying, buying, loading it. That's what we call accumulation taking place in that zone. As a day trader, you want to take the small portions steadily in the accumulation zones, steadily loading, your trading accounts, That's why these key levels are important for us. For the whole year of 2014, we do not want to forget these key levels. So there's one here, Do not forget that we break above the level of 1450. There's a high chance that the price may try to retest it. But before that, there are other key levels. I highlighted this level here, 1941. That's the 138% Fibonacci extension of the prior bullish phase. It's the motive wave. Now, there is another key level above. That's the 161.8% Fibonacci extension level. It's at 2247. I'm going to note it down myself as I'm recording this video now. All right. That's 161%, 161.8% Fibonacci extension of the prior move. All right. So these two key levels, do not forget. So the price near the level of 1941. So if I switch my time frame now, and I go to the, let's see the daily chart. Hopefully we see it's not visible here. I will go to the weekly chart. This is it, 1941. So the market is trying to retest that level. It's approaching it here. If it comes near this zone, or if it's come out of the rising channel in this zone, we will look for opportunity to sell, because we will know that the origin, okay, the origin of all sell signal is what? It's a resistance level. The origin or the cause of all bullish signal is a support level where there is a value. All right? Okay? So this is it. So the price now in a rising channel on the daily chart approaching a resistance level. This is a very important resistance level. Professional know this level. 1941. Suppose you were not aware of it. Suppose you were busy buying in this zone. So it's not very good, because it's a resistance zone. It's not a good place to buy. So you see now, by knowing a little bit about Fibonacci extension, you are able to detect this level of 1949. If you were not aware of it, you can buy into a resistance level. It's like a driving at a high speed in a dead-end road. That's not something that you want to do. It's what's happening here. All right? So if you're a day trader, you want to know where our resistance level, so you can adopt the. So now it's pulled back on the edge of this. Okay, if you are desperate to buy, then you can try to buy on the edge of this rising channel without violating the multiple time frame trading method, the setup, the signal, and the low risk entry point. You see now? I'm going to go back again to my yearly chart. So we have two levels, 1941 and a level of 2247. So these are target price level, and we want to know where are the key levels so we know what's happening. As I told traders also relating to the Nasdaq 100, the Dow Jones, for the S&P 500, as long as, going to say it again, as long as the S&P 500 stays below the level of 1849, priority to sell signal. Doesn't mean that we sell anyhow. We will take a valid signal on the edge without violating, okay, the rising channel, the declining channel, the horizontal channel, which are the market patterns. Okay? If the price going down, it will be in a declining channel, displaying lower lows and lower high. If the price display a lower low, followed by a lower high, and we receive a sell signal on the edge, we will sell. Okay? But the price might display a lower low before retesting the edge of the declining channel. So if we have a low, and the price fails to display a new lower low, it is telling us that the bearish momentum is diminishing. So if the price pull up and retest the edge of the declining channel, we will be careful. We don't want to sell in that case. We will be careful because the price has failed to display a new lower low before retesting the edge of the declining channel. The opposite is true when we are in a rising channel. We'll always use a multiple time frame trading method, which we will find is value setup on a higher time frame. Can be just a pure resistance zone, like here is a resistance zone. This is a setup. The price in the resistance zone is a bearish setup. All right? But now, by going to the daily chart, we can see that the price is not yet out of the rising channel that we have seen on the daily chart. So from the yearly chart, I switch now to the daily chart. Okay, try to make a multiple time frame trading method decisions. All right, going back again to the yearly chart. Now, I need to mention to traders that our videos are for traders that want to learn to put into use, a better trading method instead of going round. That's why we care about it. It's not easy. New traders should be very patient. It will take time. It can take a year, month before one can understand clearly what is taking place in this messy market. All right? One must always adhere to the 5% money management rules. Use a demo account, okay, to develop a better trading ability. All right? Okay. All right. So we know these are two key levels now. So if the price stay below the level of 1849, priority to sell signal, As the price going down, if it's in a declining channel, the price is looking for a better support level. The first and nearest support level, if the price is bearish, is the median line of the year 2013. That level is at 1637. This is a very important level. It's also a psychological price level. The psychological price level will divide the market into two zones, the bullish zone above and the bearish zone below. So if the price is pulling it down, coming near this level of 1639, don't sell onto the support level. If you want to sell again, you allow it to dip below the pink line to retest it and to confirm the pink line 1637 as a resistance level, and the price start going down again in a new declining channel. That's when we can sell again. As always, the economy news, the fundamentals, the market leaders can change the dynamics of the market. So though we are discussing the technical trading, we do not want to forget Google Finance. We do not want to forget Yahoo Finance. We do not want to forget Forex Factory, all right? Because we are not alone in the market. There are speculators. There are hedge funds that are using economy news constantly. The institutional bank, the pension funds, all right? The algorithm traders, the high-frequency traders also are paying attention to economy news. So we want to combine the technical and fundamentals, at least to know what economy news do and what impact they may have on the market, okay? So this is it. So if it's found a resistance below the high of 2013, start going down, we must pay attention to the median line of 2013 at 1637. If that level fell, well, the next level is 1450, which is the major resistance that has been taken out kaput here. So if we go above the high of 2013, which is at 18449, and start going up, remember, people will say it's a breakout, but there is a resistance here at 1941. Do not forget that level, 1941. If it goes above 1949, find a support, break a ball, retest, turn around. The next support level, the next target price is 2247, 2247. Looking at the price set on this yearly chart, ladies and gentlemen, we can see that there was a bullish trend from here to here. I can highlight it for you. So this is what we call, in the language of Elliott wave, this is the motive wave. So then we see 1, 2, 3. Now the price break above the range. There was a range here. Are you with me? Follow me carefully. Why? I'm going to explain to you why I highlight the level of 161.8% as a key level. It's not because it's 161.8% level. That's why I highlight it as a key level. It's because of the projection of this channel that I'm going to draw now on this chart. Let's move my, okay. That's it. Pay attention carefully to what I'm doing here. Okay, that's it. I'll give up on that one. All right, I'm still here. So pay attention to this green channel, green horizontal channel. I hope you can see clearly on your chart. This is a green horizontal channel. So the reason why I highlighted the 161.8% extension as a key level is the projection of this channel. So if the price out of a channel, okay, to the upside like this, you see this is the size of the green channel, we will project it to the upside, bringing us above the level of 1949 into the zone of 22, okay, 47, okay, this is in the zone of 2247 is the projection of okay, this green channel here. In fact, it's a little bit longer than that. That's it. All right. So it's bringing us in the zone of 150 Fibonacci extension zone near the zone of 161.8%. 0.8% Fibonacci extension zone. The price near the level of 1941, and we need to watch those key levels carefully. All right. Another thing I need to mention to traders before I close this video. You see there was a bullish progression, and then we see a consolidation here. If the price, if the macroeconomy, if the global economy is recovering, which means the unemployment, this is the key, the unemployment is going down in China, in Australia, in United Kingdom, in Europe, in America, in the world, if the unemployment is going down, all right, and also we see more job creation, all right, if, okay, the housing market, which was the #1 cause of the credit crunch, is improving rapidly, all right? And the Federal Reserve has stopped printing more money, all right? There's a high chance if we have a real value, which means business are creating, okay, products, are selling real products, okay? They are innovating, they are making real money in a dynamic market, which means the consumers also are earning good salary, they are saving more money, they have okay, extra money to spend, and we are in a real bullish market. You understand? If we have a real bullish market, these stocks, this not a stock, this S&P 500 index has a high chance, okay, to go up to the zone of 2726. Somewhere up here is out of the charts. 2726. That's the greediest target for the bullish progression. That will form what we call the ABCD chart pattern. All right? So what we will do is that as we see this projection, it pull back like this, we will project it to the upside, the same distance from here to here. We will project it to the upside, bringing us to the zone of 2726. That's the long-term target for the S&P 500. If you are a long-term investor and you have done your homework, you check the global economy, you do your forecast carefully, okay? You analyze, okay, the fundamentals, and you want to buy and be patient for many, many years. The greediest target for the S&P 500, which we can note it down now, is at 2726. The question is, will the S&P 500 ever reach the level of 2,726, 2726? That's the greediest target. Yes, it can reach that level if the fundamentals are solid, if okay, the global economy becomes bullish, if the consumer, okay, lifestyle is improving, consumer will buy, and the business will make more money, and they will create more product. The more profit they will make, they will be able to invest back into their business and have more market share. It's not all about technical alone, though we are talking about the A, B, C, D chart pattern, bringing us to the target zone of 2726. That will be possible only if we have okay, solid fundamentals. All right? For the S&P 500, to summarize this discussion, there are key levels that we need to watch. The first one is 1941, which is okay, the horizontal line here. If the price stays below the next key level at 1849, as it is now, we will give priority to sell signal, but we must watch the median line at 1637. If the 1637 fail to hold the S&P 500, the next key level is okay, at the level of okay, 1450, which is the major resistance here. Apart from these two key levels, there's also the level of 2247, which is a 161.8% Fibonacci extension level. The greediest bullish target for the S&P 500 is at 2726 somewhere here, using the chart pattern A, B, C, D chart pattern. But the level that is critical right now in the short term is the level of 1941. If the S&P 500 resistance here, and start going down. I move my line a little bit. Okay. All right. So if you find a resistance here, start going down. In the language of Elliott wave, we will see that S&P 500 has a high chance to form what we call the C corrective wave, which will be a kind of a 5 mover down. That will be a little bit bearish for this S&P 500. But as the price going down, if the price going down, the price is always looking for a better support level. So that's why we want to go step by step without assuming anything. The pink line, and then a level of 1450, step by step. If it dip below it, the level of 1450, we will prefer it, okay, to go a little bit down and to retest it to confirm it at a resistance level, step by step. But as this is taking place, if one is trading, one is using a technical alone, one can be in trouble. So one can assume that definitely it's going to go down, and it will not go down if the fundamentals start improving, if there is a more job creation, if the unemployment is going down, okay, the S&P 500, okay, will not go down. So for all sell signal must be supported by weak fundamental. All bullish signal should be supported by solid fundamentals. Okay. I hope I've said enough about the S&P 500 that you will put into use. Okay. So for this year, we can go back to this video many times because we want to navigate through the market. We are trading the S&P 500. We are trading stock that are listed on the S&P 500. All right. We want to know the key level, so we know where is the market now, so we are not fighting the market. Right now, the market is at a resistance zone. It's also below the high of 2013. Theoretically speaking, it's bearish. But if it's bearish, it must display lower lows and lower high. If you fail to do that, well, it's not truly bearish. Until the next time, enjoy yourself and be very happy. We are the TSTW SYS 008 traders.